The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there had a fun weekend and indeed a fun and profitable start to the trading week. My name is Mark Longo, and I will be your host for this ebullient episode of the old Option Block. And so that means we all have to be very joyful and cheerful right now, Uncle Mike, so you have to start dancing and singing in the background. And if you can't tell, today's show will probably be somewhat the opposite of that, since I do have a bit of a cold that I am fighting out from underneath, but I will do my darndest to make sure we do have, indeed, the most ebullient of all episodes. And I am joined by our stalwart panel of contributors, starting off to my left, mostly politically, if not logistically. Good old Mike Tusaw, Uncle Mike from Know Your Options, Inc. Uncle Mike, how was your weekend, sir?
Well, first off, I'm a lot of things, but I am not to the left. So with that being
said, that probably slams me too, because it makes people think I'm some crazy right-wing guy as well. So there we go. It makes both of us look pretty bad, which is always fun.
Hey, in full disclosure, I hate all politicians pretty much. I am not prejudiced. I think they're all horrible. So
yes, and
in honor of Blago's announcement today. But anyway, excited to be here. It's a fresh week, fresh attitude. Just got back from a Boundary Water fishing trip this past weekend, and fishing was horrible, but the camaraderie with friends and nature was awesome as always, and just excited to get back at it this week.
Yes, you were back up in the old mountains, yet you have very little to show for it, unfortunately. How'd the wrestling of the grizzly bears go this time?
Not too bad. Actually, you know what? I've been going up there for about 10, 12 years now, and just so you know, I did not get skunked. I did catch a 17-inch smallmouth. Okay, we're on the radio, so I can be a little bit more, I'll be a true fisherman. I caught a 3-foot smallmouth bass, and but we did get, not really. I don't want to get struck by lightning, but we did actually see a moose up there. I've actually never seen a moose, and it was pretty cool. I was excited.
And that voice listeners have heard gasping in awe in the background is none other than Mr. T. Nav himself, good old Tim Navabi, filling in on the Options Express hot seat for today. Mr. T. Nav, how was your weekend, sir?
My weekend was very good. Thank you very much for asking. It's graduation time, so I was at an 8th grade graduation. And, yeah.
Always the most scintillating of times, those 8th grade graduations.
Yes. How was your weekend, Mark?
Excellent. We had a lot of friends and family in from out of town, so I got to play tourist in Chicago, which is always fun, doing the boats and the sightseeing and the museums and all the restaurants and all that fun stuff.
What was the biggest hit? What did they like the most?
I think the biggest hit, actually, because everyone came in town to see my little guy, and little guy loved the dinosaurs at the Field Museum, so I have to say that was probably the biggest hit. He's only 2.5, but he's getting into dinosaurs. He was walking through the gift shop, the Sioux gift shop, and he picked up a little Triceratops and said, "Daddy, Ceratops." So he's starting to learn the names already, which I thought was pretty funny. And, of course, listeners, we are a man down today in terms of good old Seabass Mark Sebastian, but he might be joining us later on, so we shall see. And with that, we will roll right into the trading block.
The trading block.
Welcome to the trading block. This is the section of the show where we talk about, surprise, surprise, what has been trading today. And there was some actual movement today. Of course, we've had some decent movement over the past few days on very light volume. Today was not much different. We saw the SPOOs up nearly 12 handles to close at 1280.10. The Dow up 109 handles to 1243. NASDAQ finally up yet again 35 handles. So a decent day for the tech sector, up to close at 2688, and the good old VIX cash down 0.54 to 20.56. And as I mentioned, it was indeed a relatively modest day on the street. Everyone's off enjoying their summer vacations, and they're not putting orders through to TNAV as they were a few months ago.
The euro currency, we gapped down last Thursday, and it looks to me like we maybe, it's hard to say, but I noticed today that we actually had an up day in the euro currency, and it's kind of broke into its gap from last week. So that's definitely something that I'm going to be watching. And that with what's going on with Greece, maybe the world's actually not going to end. Who knows? But I definitely thought the price movement on the euro was pretty interesting today.
Do you guys play at all in the currencies for your clients?
Typically, no, but it's something that we monitor, and that it's one of the ones to where we'll look at it, and occasionally we will do some currency hedging if we have like international stocks or something along those lines, but typically we're not big currency players too much. I think we had a couple people and some put spreads that we got out of today, but it was nothing too extensive, no.
And Tim, this is a perfect segue then to peer behind the curtain, so to speak, over at OX. I know you guys made that big push to implement that FX platform a month or so ago. How has the uptake been on that platform so far?
Getting a little bit more activity, which is nice to see. We are definitely seeing a little bit of an uptick there.
This is a rough time of year to launch a new platform and a new product category.
Mm-hmm. Yeah.
You might have seen a little more uptick if it was, March or something.
Yeah, or maybe October, something, September, something like that. Yeah, it's good.
And Uncle Mike, I know you've been active in and around Ford a lot. You had a little bit of a move today. Have you been rolling to the upside? Are you still writing at the money calls here in Ford? What's the game plan going forward?
For right now, we're short the 14 calls on Ford for August, so we still have a little bit of upside, and I'll be happy if Ford does. I'll be more than happy to have the joyous problem of rolling calls upward if Ford comes up to the 14 level. But for now, we're just not the extreme theta of the weeklies that is ever so tempting. But for now, we're just in the 2-month covered calls, and we're just letting it sit there for now.
Speaking of extreme theta, Cisco has been vacillating around that 15 handle for quite some time now. So there's been a lot of good trading in and out of front month and weeklies on Cisco if you're trading in and out of that 15 handle. Are you still active in Cisco, or are you completely out of it now?
Not messing with it. If it's not something we want to do for a longer period of time, we typically tend to stay away from it because it's something to where we wouldn't look to hedge it. And we don't go out of the hedging realm too often, but when we do, we like to have what we believe are good risk rewards, and we don't believe Cisco is that right now.
Yeah, Cisco is a bit of a bear. So I think that's broken a lot of hearts on the street as it's gradually drifted from the 20 handle down to the 15 handle.
A lot of trading in Apple today, I saw. I don't know about you guys, but I think it started out with a positive comment this morning, right, from one of the brokerage firms. And yeah, it had a lot of people, basically being bullish Apple today.
Yeah, Apple's just been all over the board lately. You get down below the 320
yes.
handle recently. It got down to like 318, I believe, right? Somewhere in that range.
Exactly. Yeah.
So, yeah, it's quite the roller coaster in Apple lately. If you've got some decent premium, maybe one of Dr. Duke's iron condors, as we will discuss coming up later in the interview block. But it might be a good time to be putting on some condors in Apple. What are people doing out there in OX? Are they buying premium or credit spreads, debit spreads? What are they doing out there?
It seems like right now people, aren't afraid to buy premium. We do have our usual sellers. They're always around, and they're consistent. It seems like right now we have people really kind of trying to step in and, take a directional move. And on some of the bigger things, Google, Netflix, believe it or not, those, really were kind of popping up today. With people placing trades there, so.
Yeah, and we had an interesting opportunity with Apple last week when it went down as it did. We were actually, for our callers, we were in the 360 covered calls, and so we got out of the 360 call for our clients that were in that for just a few pennies. So with that, I'm excited. So I'd love to have Apple have a nice little run up. They have earnings coming up. I forget if it's the Monday or the Tuesday after expiration in July, but Apple's going to be no guarantees as to where it's going to go for the next few weeks, but I'm pretty excited about looking at it. I think it's going to be an exciting ride, whichever way it goes.
So you had the 360 covered call. What was the downside on that caller?
In that case, we widened it a little bit. We went down to 300 with it, so we didn't make any adjustments. We've been in it for a couple months. This was a little bit more longer term, and so right now it's not quite a free 300 put, but it's pretty close to one right now. And so what we're looking to do is, if it goes up a little bit more, we may put on like a 1x2 or perhaps sell the covered call again if the premium is there. But with it, what we're watching as it does come up is the relationship between the price and earnings coming up about, like I said, 2 or 3 days after. I forget if it's the Monday or the Tuesday after expiration, but we're excited about the opportunity that we had when it came back.
I think that's going to do it for the old trading block, and we will roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the section of the show where we discuss the interesting and or the unusual options activity that's lighting up the tape. And speaking of unusual, we are joined in progress by good old Mark Seabass, Mini Metals Sebastian.
Hey, everybody.
Mr. Sebastian, how are you doing today, sir?
I'm doing great. How are you?
Super excited to be alive.
I am, too.
And to be talking to such a fine group of fellows, such as you guys. And, of course, we're going to kick things off with YHOO. Go ahead, Mr. Sebastian.
Yahoo!
There we go. Closed today at $14.88, essentially unchanged on the day.
Not just essentially, but actually unchanged.
Yeah, I think it was up like a penny or something nonsense. But yeah, this is the name that does about 90,000 contracts a day. Today was a little bit lighter, did about 53,000. Not surprisingly, given the fact that we've seen a 21% correction in the value of Yahoo shares since the beginning of May. So a little under 2 months, the stock's just been beaten up quite a bit. Yet, what I thought was interesting about this is we've seen a lot of bearish premium in Yahoo over the past few months. We finally saw some relatively sizable bullish premium in Yahoo. We saw trader coming in today picking up 7,500 of the AUG 14-18 call spreads. He paid $1.41 for the 14, sold the 18s for 18 cents, netting out to $1.23 a contract. Of course, this has got to rally to over 15.23 for him to start making money on this deal, so that's about nearly 3%. But I thought it was interesting just to see some broad upside activity in Yahoo right now. I don't know anyone who's really overwhelmingly bullish on this stock aside from this guy. What do you guys think of Yahoo right now and its prospects?
A bunch of Yahoos over there.
Oh,
couldn't resist. It's tough. Ever since what happened with Microsoft a couple years ago and they didn't get bought from them, it's really I think it's one of the things to where it's kind of like New Coke. I think they wish they would have had a time machine, and so it seems kind of hard for them right now.
Yeah, what was the price there?
It's a sinking ship.
Was it mid-20s or was it mid-30s Microsoft offered for them?
It was mid-20s, and that thing is a sinking ship. I don't know why anybody would want to own it unless they thought it was going to get bought out, but it ain't getting bought out.
All right, then. We'll just move on to USU, which is the ticker symbol for
USU.
USU, for USEC Inc. This is a supplier of low-enriched uranium. So for all of Mr. Navabi's dirty bomb plans, this is where he turns for his enriched uranium.
John Grigas was always complaining about Tim Navabi's dirty bombs.
He is. He sits right behind me.
Oh,
yeah.
no. Uh-oh. 3 burrito lunches. I'm sure John's not looking too happy after those. But this one closed today at $3.09. Another one unched on the day. They do about 2,600 contracts a day. Typically, they did nearly 20,000 today. And the bulk of this, nearly 13,000 contracts, was in one sizable credit call spread. In October, we saw the OCC 4-5 call spread going up 6,300 times. Netted out, he sold the 4s for 41 cents, bought the 5s for 30 cents, netting out to 11 cents. So that's a sizable amount of contracts to put through for a silly little 11-cent upside spread. If it all works out in his favor, this guy stands to make nearly $70,000, whereas if it goes to the downside, he can lose well over $500,000. Uncle Mike, how does that fall on the KYO risk-reward spectrum?
The fair's great if he's right. So it's one where I'm not typical. It's you better be right and stuff like that, and that's a pretty narrow margin, and just oftentimes it's one of those trades that'll work 5 times in a row, and then on the 6th time it goes against you. And if you have things in place to make that a system, great, but oftentimes in the retail world, you see people thinking, wow, I can make this much, and this is what would have to happen for me to actually lose money, and you got to be careful on things like that.
Yeah, this one, obviously, I don't have deep insight into the low-enriched uranium market, unlike Mr. T-Knob there. So perhaps this guy knows more than I do, but this is just one of these trades that just makes the back of my neck stand up. See,
sounds like a guy that knows it sounds like an insider type thing. It may even be covered.
I would hope so at this point. If he's writing October, he's probably got some underlying, and he wants to just thinks this thing is going nowhere, but he can't dump it for whatever reason, so he writes. Writing October spreads upside for 11 cents doesn't really get me too excited, except on the negative aspect of it. And then we're going to close out today. Actually, we'll do a quick interjection because Mr. T now found a fun one. Good old Petro Hawk Energy Corp closed today at $23.52, up 28 cents or 1.2%, and the ticker symbol is HK. And this is the name that does about 25,000 contracts a day. They did 72,000, almost 73,000 today. And the bulk of that was in one sizable bullish risk reversal. Saw a trader come in and selling 30,000 of the Jan 2012 21 puts. He did those for a little around $2. I don't have the exact prices here. And then he bought 30,000 of the Jan 25 calls for around $260 again. So a sizable bullish risk reversal. And Mr. T. Novice, you said you were watching this one. What's your opinion of this bullish risk reversal out here on PetroHawk?
Well, if he's bullish the stock, then I think he did the right thing. As long as he's willing to take that risk. Going out on a limb there, Mr. T.
Right thing. No, I mean, I think it's an interesting bet. The guy's basically betting that, it's kind of almost an oil play, right? Oil's at super cheap levels, probably a little oversold, and the guy basically picks a company he likes within a sector that he thinks is too cheap. This is a great play. And even if he's wrong, he pays 50 cents instead of what he would have paid for the stock or the calls. So I really like the play a lot if, as Tim Navabi said, if you're bullish the stock.
No, Mark, I really liked how you just sort of summed that up. I mean, really well. I mean, I think you're exactly right. It's in a sector, it's a company that he likes. So hey, let's go with it. I think, you're right on.
Right. Yeah, and I like PetroHawk personally. We have exposure to PetroHawk ourselves. We actually originally got into it as just a plain stock holding for our people or a person or whatever you want to call it. And with PetroHawk, we had a little bit of a run up on it, and it was just originally intended to be a stock holding. But we did, as it ran up, we collared it. So I guess technically I'm the opposite side of that trade, not those exact strike prices, but we collared it when it had a run up. So right now we have some room to go up in Petrohawk, and we're still ahead on the trade, but it's one where we took action when it was higher and we collared it. And I like this one. I think that energy's gotten the tar beat out of it lately, and at some point you got to think that we might have a little bit more of a run up. And I like the fundamentals on Petrohawk. I like the fact that they do have not only oil but natural gas exposure as well. And I am a fan of the stock over the long haul.
And looking at the chart here, this name hasn't really been below 21 since back in early March, and it's been vacillating most of the past few months in this 23 to 27 range. So if it bounces back up to the upside in this range, and this trade's looking pretty good.
I think that, I think that's probably what people are starting to do right now. This is also a natural gas play, and I think you have some people really starting to sift through a lot of these companies, trying to find the ones that, they like, ones that, they believe in, and starting to sort of play that sector, probably, as much as they can in crude oil and natural gas. So they're picking stuff out like this.
It's an interesting play, for sure, and a nice position. 30,000 cars ain't nothing to sneeze at. So the guy isn't just saying he thinks he's right. He's saying I really think I'm right. So good stuff.
Yeah, and a nice cheap upside in Petrohawk. All right, that's going to do it for the old odd block. And now we're going to roll right into the Tim Navabi Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Tim Navabi Express block. This is where we talk about all things Tim Navabi. So, Mr. Navabi, take it away, sir.
Thank you very much, Mark. And I just kind of want to go over a couple things here that were traded at Options Express. And, let's take a look. I just want to get some most actives here. Really light day, really quiet day. We do have the holiday coming up. So, SPY was number 1, SPX. Number 3 was NLY. That was,
right?
Yep. I've seen a lot of people sort of start to move on that over the last week or so, and, kind of looks like they're following through here. Then the Qs, then Apple, SLV, GLD, RUT, FXI. That's pretty interesting that, FXI kind of pops up on our board here. So, those were some of the most actives at Options Express. As far as some of the other markets that were starting to make news here, like Mike said, the euro is one that people are starting to watch real close here. Crude oil is another one. And, we started to see a little bit on Friday, gold and silver not really moving in the same direction. So, that's kind of really what I have. It's not too much, nothing great.
But it's good stuff to know. I mean, FXI was one that I wouldn't have expected. Annaly was probably a div play, but the FXI one is one that pops out at me. That thing is bouncing off of a bottom. The vol's not particularly high. It might be an interesting little play. That's that type of information, it can be mined like gold and silver, which are on your list in many ways.
Thank you.
But you have to know what you're doing, and I thank you for that information, Tim.
Sure, no problem.
With that, I think we could close out the old Express block and roll right into the interview block.
The interview block.
Welcome to the interview block. This is, of course, the portion of the show where we drag some poor soul kicking and screaming onto the program and pick his brain about various options, trading strategies and techniques and tricks and all sorts of fun stuff. And today's guest is a repeat offender. He is good old Dr. Duke from Parkwood Capital. He also works a lot with our boys over at Know Your Options. Dr. Duke, welcome back to the program.
Thank you. Glad to be here.
And now a lot has transpired since the last time we had you on the show. I think we'll dive right into some of the interesting things I know you're working on right now that I think will interest a lot of our listeners. Of course, as always, condors and iron condors are pretty much one of the hottest strategies we're seeing right now. There's a lot of newsletters out there pushing iron condors as the panacea for the options market. There's a lot of people out there analyzing and working with different aspects of condors. So we always hear a lot of feedback from our audience and from our listeners about different ways to work with iron condors, and particularly how to manage and adjust them. And I hear you've got some interesting things coming up that pertain to this exact topic.
Yes, the iron condor is one of my favorite strategies, has been for a long time. But I guess I always try and emphasize to people, before you get too carried away with the excitement, be sure you understand how to deal with it when the market turns against you, because it can be a very dangerous trade.
And why do you like condor so much?
Well, the biggest reason is simply this. I find that I can react to the market, what the market gives me today, and not be burdened with this idea of trying to predict where it's going tomorrow. I think that's a big advantage. If you just set up a trading system with a series of rules for your entries and exits and how you're going to adjust and so forth, then you just simply sit back and watch the market, and you know, if it does this, I'm going to do this, and so forth. And I think that relieves some of the stress and tension.
I know a lot of people who trade condors tend to lean on one side of the fence or the other, the long or the short premium sides of the fence. Which side of the fence do you fall down on?
Well, I'm selling them every month, and I'm pretty far out of the money. I'm typically putting my spreads out at about anywhere from about 1.2 to 1.5 standard deviations out of the money in both directions. Typically, it turns out with a short option at about a delta of 10, 8 to 10, something like that.
Oh, yeah, there's one thing I think what's interesting. I think most of our audience totally gets the fact that with a condor that if the market stays the same, you just let the options expire worthless, and it's pretty easy from there. But one thing that I always like to ask or talk about with a condor, you always have to be prepared for when the market does go against you. So what are some ways with which you like to react when the market does either start going a little bit too high or a little bit too low and getting to that too close to comfort level?
Well, certainly, before you even put the condor on, you need to know exactly what you're going to do and when you're going to pull that trigger. What I typically recommend for beginning students is what I call the 200% rule. In other words, just track each of your spreads. If you put it on for 70 cents, then when it's going to cost you twice that, or $1.40 to take it off, that's your trigger, and you close it out. And that's a pretty simple adjustment. I mean, it's not really an adjustment. It's really more like a stop loss. And you just take off that side that it's moved against. And what I find, if you do that, you're closed out a lot of months because it doesn't take too much of a move to close you out. But you avoid the losses, and that way you can enjoy the gains on the good months, and you end up profitable in the long range.
You know, I like to hear people talking about adjustment and managing positions, because all too frequently in options education, we hear people coming on and talking about a given strategy or a given technique, and they say, here's how much it costs you to put it on, or here's how much you collect when you put it on. Here's how it looks at expiration. Here's the best case scenario. Here's the worst case scenario. And that's pretty much it. And the discussion of management and what happens between when you execute that trade and the expiration point, that's really the heart of the battle for options trading. And yet that is not frequently a topic of conversation for most educators and most newsletter promoters.
Yeah, I spend a lot of time on that whenever I'm talking to anybody about condors, because that is truly the critical success factor. If you don't know how to adjust the condor, then you really have no business putting it on in the first place, because it, like I said earlier, it can be very dangerous when it moves against you. And so people need to understand how I'm going to adjust, and even more importantly, to have decided that up front, because sometimes I see people and they get into the heat of the battle, so to speak, and the market's moving against me. It's got a big down move today or a big up move, whichever. And then they're starting to think about, okay, what should I do? When should I do it, et cetera. Well, of course, that's psychologically the wrong time because you're rattled and you're scared and you're likely to not clearly think through this. And so that's why I really emphasize people setting up a trade management system in advance where they know exactly where they're going to trigger their adjustments and what they're going to do to adjust. And then if it continues to move against them, they know where they're just simply going to close it out and throw in the towel.
Dr. Duke, nice to meet you. My name is Tim Navabi, and I'm a broker here at Options Express.
Thank you.
And it's a nice conversation, and it's nice to hear. You talk about the condors. It's probably one of our most popular strategies here. And boy, I really can ask a lot of questions. But let me ask, what do you start with, or do you prefer to do equities or indexes, or what is maybe your first step with I definitely like how you said, okay, have your rules sort of, in place almost before you put the trade on. What's one of your first steps? Would it be sort of scanning the market? Would it be, looking at equities or indexes? Is there anything in particular that you're drawn to first?
I trade the Condor in two very different ways. One I call the opportunistic approach. And that's typically just with equities. In other words, I'll be, like last month was a good example. In early June, I was looking at Google. Google was trading sideways, seemed to be locked in this range, and so I put an iron condor on Google. And so that was just a case of watching a stock, identifying the sideways channel, and using the iron condor as the trade of interest. Now, I distinguish that from the iron condors that I put on indexes, and I do that every month, and I'm not looking for an opportunity there. I'm just simply playing exactly the same condor month after month after month. And the two trades are managed very differently because in the one case, I've made a prediction about what's happening, and of course I have stop losses and so forth. But in the other case, I'm not making any predictions. I'm simply setting up a system that I adjust on the fly based on what the market does to me. So it's two very different approaches.
Thank you.
Now, Duke, you had mentioned Google. I know you have another newsletter out there to where you do actually do some things in the opportunistic world, as we'll call it, on some individual stocks. And I read your trade today. It was very interesting, I thought. Can you tell us a little bit about some of the stocks that you're working with right now and perhaps some of the techniques that you're looking at right now with some of the individual stocks? I thought today's trade was very interesting. I thought our listeners might be curious to hear what we're doing with that.
Sure. Earlier, well, let me start with last week. Last week we put on a trade on Apple. And I've been watching Apple. As you know, Mike, I trade Apple a lot. I've basically traded that stock over the past couple of years, almost every month. But every year, if you watch Apple's stock price pattern, every year, sometime in the summer, it typically hits its low point. And then it tends to trade up until the end of the year, basically because of people assuming that Christmas time, holiday times, people are going to be buying iPads and iPhones and iPods and so forth. And so typically that's a typical historical pattern of the price. So oftentimes what I do about this time of the year is I look at the January of the next year options, in this case January 2012, and I look at a wide butterfly that's out of the money, and I'm basically predicting a move on Apple. In this case, we bought the 350, 400, 450 January 2012 butterfly. And you can put that on, at least last week we put it on for about $890 per contract. And it's a pretty conservative trade in that you're really predicting that Apple's going to be trading around $400 in January of next year. And if you look at all the analysts, they're predicting target prices in excess of 400 typically. And if it gets to 400, say in November or December, you'll still have a very nice profit, and you can take it off early. And so that's an example of a trade we put on last week. Today we actually put on one on ISRG, and there I was looking at a calendar spread, and we put on a calendar spread between August and October at $350 with calls. And there what we were doing basically is playing a positive IV skew between August and October. In other words, the August options are a little bit more expensive than the Octobers, and they're likely to get more expensive as time goes on because we're approaching the earnings announcement for ISRG. I think it's coming up on July 20th, I believe. And so that's right after July expiration. So the August options are the ones that everyone's going to be speculating on the earnings announcement with. And so the IV of those options is likely to go up, and it'll take up the IV of the Octobers a little bit as well. And basically that call calendar will appreciate, and that skew will get wider, which will push the break-evens wider and actually gives you a bigger window of profitability to operate in. So it's a pretty positive trade. It's a reasonably safe trade in that it's probably the easiest way to lose money with that trade is if IV declines instead of increasing. And in this case, with the earnings announcement coming up, that's very unlikely. It's most likely going to ramp up. And so that's a couple of trades we have on right now that are directional or opportunistic type of trades.
Dr. Duke, if you don't mind, I have one more question here. And thank you very much. I've been enjoying listening to you so far, and it's very nice to hear. When you step away from the month of trading, what's a performance number? And I don't like usually going in this area, but what's a performance number where you would say, okay, this was a good month, or boy, this just wasn't a month that worked out for us?
Well, as you know, that varies a lot. It's hard to put a average on your monthly performance because it does vary a fair amount. My trading group, which is the recommendations that are more directional, that group is up 16% so far this year. So averaged over 6 months, I'd have to go back and check, but we certainly, I think May was our down month, and I don't remember percentage-wise how much we lost. But in any case, we're up 16% on average for this year so far. The Flying with the Condor service, which is the one that just trades the Condors on the broad indexes, it's up 23% so far this year. So both of them are stomping all over the S&P because I think the S&P 500 is only up about 2 or 3%. But I would say if I were advising a student or someone who was asking me what can you make in the options market, I would be hesitant to say you could make much more than maybe 3 to 5% a month on average. You'll certainly have months where you make 20%. But you're going to have months where you lose 10 or 20%. So I would say 3 to 5% is a reasonable expectation.
Okay. I have one other real quick question that just kind of popped in my head because this has to do more with your Flying with the Condors, where you sort of are systematically putting on these trades. Has there ever been a time when when volatility maybe has been just so low where you said, boy, I'm not going to put this on today, or is it no, we're straight ahead? No, I
always go straight ahead.
Straight ahead, huh? Okay.
In effect, since I use a standard deviation calculation as kind of my first run at where am I going to place my spreads, if you think about it, your implied volatility is really driving that number. So if the implied volatility is very high, that automatically means that I'm going to be putting my spreads out quite a ways out of the money, and therefore a little safer position.
Sure.
If IV is very low, that means my standard deviation calculation is small, and I'm going to be placing them in tighter. But they're in tighter in a situation where we're not expecting the market to move much because IV is low.
Right.
So they're not really that much more dangerous. And so that's why I rely on standard deviation, because I feel like it kind of evens out these volatility swings to some degree.
Sure. Okay.
Well, Dr. Duke, we want to thank you for coming on the program today. And I know since we have been speaking quite a bit about condors, I know you do have a Condor webinar coming up. So why don't you tell our listeners a little bit about what you're going to cover in that webinar, as well as the details like when it is and how they can access it?
Sure. Yeah, we have a webinar coming up Wednesday evening at 8:30 Central Time, 8:30 p.m. that is. And it's based, I think it's titled Adjusting the Iron Condor in a Bear Market. And what I'm basically going to be talking about is what do you do when this thing moves against you, like it has basically for the last 6 weeks or so. You can find the registration and sign up for the webinar. It's entirely free on my website. If you go to parkwoodcapitalllc.com and go to the Coming Events tab. You'll see the webinar described, and you just click on the link and you can register.
And with that, I think we're going to close out the old interview block and roll right into Around the Block.
Around the Block.
Welcome to Around the Block. This is the section of the show where we all break out our crystal balls and take a look and see what's coming up on the horizon for the next few sessions. And of course, Greece and the old euro is dominating everyone's thoughts these days, and there was a lot of thought that the euro was in serious trouble over recent weeks. It seems that may or may not be the case these days. What do you guys think about what's been happening over there with all these restructuring plans and what's been happening out in Greece in the recent sessions? We'll start with you, Uncle Mike Tusaw.
Well, like we were talking about a little bit earlier today, with the euro going down like it did, we had a gap down on Thursday. And just with today, with what's going on with it, I think that it looks like I'm by all means not getting long the euro, but it doesn't look like it's going to free fall like it looked for a while as it did last week. The other thing that I think is pretty interesting right now, the 200-day moving average has held up a couple of times. If you look at that on the SPX, we had a down day last week, and so it touched the moving average and it bounced about a week before that as well. So the 200-day moving average is probably one of the main things that I'm looking at right now. I think it's very interesting, and I think that there's I know that we've closed a lot of our short calls on our various stocks and ETFs recently, so I think that could be some opportunity right now.
Mr. T-Knob, what are you watching for the next few sessions over at Options Express? I hear you're into tipping cows these days.
Yeah. Oh, yeah. No, definitely not. But yeah, I don't know why this piqued my interest. Cattle. Cattle is something that I have been sort of looking at lately, and the symbol that I'm actually using on that is COW. If we see any sort of commodity weakness here, dollar strength, we could have some of the grain markets being moved lower, and that may boost the price of cattle or boost the price of the COW. I mean, that's sort of the small relationship that I've seen right now. Haven't really done too much on it or into it or looked at it, but it's just one that sort of seems to be sort of strong right now. I mean, everything does seem kind of weak at the moment. There's no real conviction, it seems like, one way or the other.
Is this one of your infamous 100-lot trades?
And COW? No, not at all. That happened once.
Given the fact that you're still here talking to us, you haven't bought your island in Tahiti.
Right.
It didn't
Right.
work out all perhaps as we thought. But of course, we also have some interesting numbers coming up this week, if nothing too great. We have initial claims on the old 30th consumer confidence, which is tomorrow, Tuesday, and of course, good old Chicago PMI, and then finally, most of the good numbers actually looks like they're coming out after the long weekend, which is, of course, another thing that a lot of people should be paying attention to if you're trading options right now, because we see this time and again. If you're going into a long weekend thinking you're going to hit the bids on Friday afternoon and collect an entire weekend's worth of decay, you are sadly mistaken. That weekend is already starting to come out in certain names, and definitely by midweek will probably be out in most of them. So
yeah, I think we're going to see that vol premium come out right after the Greek debt vote, and we may see a little bit after the ISM number comes out. But yeah, they're going to get out ahead of this. Everything's going to be up by probably Thursday. As I look, they started already with the VIX options. The vol of vol came in pretty significantly today, and I think it comes in further. I'm looking at kind of the July VIX futures to start taking a little bit of a dive, and then SPX volatility itself kind of starting to take a wash. Once that Greek info comes out, there's no way they don't pass that austerity bill. I find it hard to believe. So that's kind of the stuff that I'm watching right now, is just kind of, I think that with the VIX at 20.5 up 12 handles today. We actually saw vol up a little bit, skew steeper. I think there's some interesting opportunities to sell premium right here. Wait much longer than tomorrow, and I think you're going to miss the boat.
Be itchy on the old trigger finger and watch for your opportunities, because if you don't take them, you will be going through the weekend and selling into next week, and you don't want to be doing that. All right, then, and I think that's going to do it for the the Darth Vader block. I think that's going to do it for Around the Block. It's also going to do it for this episode of the Option Block. I want to thank all of my Rogues Gallery contributors for joining me today, starting with you, Uncle Mike T. What is going on over at Know Your Options, Inc.?
Well, just excited about celebrating the birthday of our country coming up. But in the meantime, one thing that we are doing on towards the end of the Sunday nights of July, we will be having various webinars. So stop by knowyouroptionsinc.com for more information.
Mr. Sebastian Mini Metals, what is coming up over at lifevest.com? I mean, optionpit.com.
I'm doing a webinar on July 12th with the guys from Volex. And then on the 13th of July, I'm doing my monthly free webinar. And on the 14th, I'm doing a webinar with the folks over at Price Group. So I'm going to be out and about and off doing stuff. So you have any and then I'm going to continue to be doing my daily blog every day at optionpit.com/blog.
Yeah, your buddy Don Schlesinger has been plugging it quite a bit, your webinar over on our Volatility Views show. So hopefully he sent a few people your way. And then finally, Mr. T-Knob, what is going on in the land of OX these days?
We do have a webinar on June 29th, 3 o'clock Eastern. Introduction to geometric trading, a new way to chart and trade. That's it. I won't be here on Friday. I'm headed up to the UP and to also celebrate our 4th of July. And, if Christmas was in July, I wouldn't be such a Scrooge, I've noticed. So.
All these days off over at OX land, he's slinging 100 lots and taking days off. Not a bad life for Mr. T-Nav. Oh, of course, before we go, I do want to remind our listeners that we do have the live event coming up on July 21st. So if you're interested in seeing all the gang together in one place for one time only, that's everybody, me, Uncle Mike, good old Seabass, Tim Navabi, John Grigas, and even Big Rob K himself, all in one room in one explosive episode of the Option Block. Then you owe it to yourself, nay, it is your duty, to come to Elephant and Castle at 111 West Adams on July 21st here in sunny Chicago from 3:30 to around 6:30, and we're going to record a nice live show. We're going to answer questions live. We're going to have a great time. We're going to give away prizes. It's going to be great. Uncle Mike's going to raffle off a fishing trip with him up in the mountains. It's going to be just an extraordinary event. I believe you're also taking some of the listeners to see Truckosaurus. Is that correct, Uncle Mike?
You name it, we'll get her done.
All right, so check it out. If you're on Facebook, you can come over to facebook.com/theoptionsinsider and RSVP for the event there. You can also read more about it on theoptionsinsider.com, as well as all the other information from this show today, unusual activity, breaking news from the options market, and all sorts of other fun stuff, including a lot of other fun radio shows on our Options Insider Radio Network. And that's going to do it for today's program. I want to thank all of our listeners out there for downloading and streaming and subscribing to this show and making it such a hit. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.